Welcome back to Closing Bell on the 3rd of March 2021 on the Wednesday. Let's start off by saying the market is looking really sad. Sentiment is really bad. It came up back up, recovering, and then it dropped back down again. So what do we do? So first of all, I would like to start off saying that institutions sold out 3 weeks ago, the second last week and last week. They have not really put their money back in. Some may have rotated into oil, some may have rotated into the likes of JP Morgan, banks, and cyclical stocks. But other than that, a lot of money are still stuck on the sidelines thinking, what should we do next? And the only people that are actually messing about in the market are you and me, the retail investors who's trying to buy low and sell high, trying to swing trade. That's what's causing the market to go up on the morning and drop back down again. It's all the people trying to pump and dump that stocks, trying to earn that 5-10% margin. For example, SEA earnings was good, it dropped before earnings, it went back up about 10-12% and dropped back down again. So you can see the zigzag, that seesaw motion overall in the last few days and potentially for the next few weeks until we see some concrete evidence that institutions are buying in huge volume because it's cheap. But for now, it's really going to go sideways. Honestly, there's only 3 things you can do. You could buy good quality stocks, you could sell your losers, or you could hold and not do anything like what I'm doing now. There's really nothing you can do unless you go lose the cash on the sideline that you would like to deploy. It's a whole different story. But think about it, the pullback has pulled all the way to almost before the Q4 2020 extravagant earnings. We pulled back to where we were just before Christmas. So we're thinking the last 2 months gains has really been wiped out. It's not just you, it's not just me, it's everybody else. So for those who took profits early, fine. But for those who took profit early, most probably has already bought in during the dip and is still sitting at the same ground zero. So we're not going up either. What do you do? What do you do? So I really want to share a piece of what I am doing just now with technical charts and fundamentals and see where we can go from here. So forget all the RSI, the price trigger action, the buy trigger and all that stuff, MACD, stochastic technical. Just keep it simple. I like to keep it simple so that we can get the conversation flowing. So all I want you to do is use the 50-day, 100-day and 200-day moving average. If you want to use 150-day, fine, you can go ahead. So 50, 100, 200-day moving day average. So let me bring out the first chart for you. So the first one I'm going to bring up to you is Facebook and Amazon. Facebook and Amazon, both companies has already touched the 200-day moving average, which is a big deal, meaning the stocks have been going sideways for the last almost 6 months. Despite great earnings for the last 3 quarters, they've just been moving sideways. Boring. So what does it mean? It means that potentially they could go into bear market if they hit the cross of death, where the 50-day and the 200-day moving and meet together. It's called the death cross. Or if you look at the other way around, the stocks are looking really cheap. When stocks look really cheap, what happens? People buy and bounce back up, or it could just follow further down. So there's two-way street where you stand. But then if you look on the likes of Microsoft and PayPal, Microsoft and PayPal just touched a 50-day moving average. They still got room to drop to the 100-day and 200-day moving average if we are going to go sideways. So be careful if you own these stocks. But if you know there are stocks that you want to average down, fine. Average down when they start touching this 100-day and 200-day moving average. Great time to buy. So it depends on how you see it. If it's part of your top 3 stocks holding that I believe on this video here, whole top 3 stocks in majority concentration, then it's a good time to buy. But if you want to swing trade and you see the stocks coming down, think about it, there's still room for drop. So even the looks at the likes of Nvidia, 50-day and 100-day moving average are kissing together. Next thing is the 200-day kissing, death cross, or looking really cheap. You just need to put in context how you feel. But the likes of Fiverr, it's still a huge way to fall. So all in all, those mega big cap stocks are looking really cheap if they start touching 100 and 200-day moving average. On the other side, everybody's been saying, let's rotate to oil, let's rotate to XLE, OIH, let's rotate to JP Morgan, Bank, Caterpillar, 3M, Johnson & Johnson. But if you use the 50-day and 100-day moving average, they are looking really expensive, just flying across. And you and me is standing here with tech stock thinking, is it time to rotate? Is it time to sell really cheap and move on to really expensive rotational stocks? You need to think that way. So as you can see, it's no harm not doing anything and just keep saving cash and wait for the next opportunity. You can rotate some, no harm. I've already started rotating my eToro. I've started buying the likes of Boeing, Berkshire Hathaway. I bought some XLE, I bought some OIH. There's nothing wrong. I bought some just at the bottom to help slow down the volatility because there's more likelihood for them going up. But I'm not convinced that I should just fully rotate into rotational or cyclical stocks because they're expensive just now while the techs are really cheap. So it's a very hard one. So it's something that I'm still sitting, I'm chilling and relaxing. I'm not panicking. I'm not watching the stocks every day because it's not really going to help me. Like somebody once told me that your stock portfolio is like a bar of soap, okay? If you keep messing about with it every day, the bar of soap will just get smaller. If you keep buying, selling, the whole thing will just get smaller. Unless you're swing trading and making good profit on your day swing trading, that's fine. But if you're messing about the bar of soap, it just gets really small. So this is me on Closing Bell. I just want to keep it neat, simple, straightforward, just to tell everybody that, you know, calm down. There's nothing much you can do. There's only really 3 things. Buy good quality stocks, average down. 2, sell your losers. Or 3, hold and do nothing. So I am most of the time hold and do nothing, and just look at the charts. If I find anything, I'll first share it with you, and hopefully if you guys want more insight with me on a daily basis and then I show you chart first, you can join me on the Patreon. That's what I will be doing, my Patreon, for the next few days. I'll be trying to find good value rotational stocks. I'll be trying to share more buy triggers and valuation on great tech stocks which are really cheap, like Facebook, Amazon just now. So join me on Patreon, you hear that up front. But if not, join me on my free Discord channel. I'll leave a new link below because it expires every 3 days. Link below, and join my group chat. And there are loads of really good people in there sharing their insights and analysis on minute by minute basis. It's really, really good. So take care, have a good day, and hope to see you soon. Bye.
I hope you enjoyed that video.
Please like this video.
And subscribe to the channel.
Please press the bell button. Ding dong.
Finally, watch the recent video up here.